To building a business. To some, it's never an easy task to partake, and to some, they have very good stories of how they started from scratch and built their empires to profitability. And that's the reason why Biz Kenya and MC Moments have partnered to bring you Biz Talks. Biz Talks. And here we shall be hosting mentors, people who have gone ahead of us, people who have created these empires, people who have also on the verge of creating these particular big businesses. And these lessons will be valuable for you, the business person, for you, the aspiring business person, the entrepreneur, so that at least you can make wise decisions when it comes to building that business. So every Friday at 8 a.m. on all business platforms, that's the Facebook and YouTube channel. Good morning and welcome to Biz Talks. Apologies, we have started 10 minutes late and so we're going to jump straight into the conversation because of time. But thanks a lot for joining us. Hope you're keeping well. So please let me know where you're watching us from. Please click on that share button, let everybody know because it is important. It's World Investor Week and we're so glad at least this week as well on Biz Talks we are celebrating it and really looking forward to what are the opportunities that exist and what are the trends that we are seeing. And guess who is in the house? Our resident investment advisor in the house. What? Rina Hicks is in the house. Hi, Rina.
Hi.
It's good to see you.
It's
so
good
very
to see you
quickly, I
too.
forgot to even tell you, had you chosen what you're going to have here? So you better do that. Guys are going to be telling us questions. Why did you start late? But please let us know where you're watching us from. Rina, have you made a choice?
I have made a choice. I'll have the berry blast.
Okay, that's a good one.
Thank you.
Let me just, with hot water?
Yes, please.
Excellent, excellent. Wow. So I don't know, why do people observe this week? I think you would...
Why do they observe this week?
Yes.
So it's a week when regulators all around the world come together to carry out initiatives to help investors understand what different things are. And so each year there's different themes.
Okay.
And the idea is just for investors to understand what to look out for, what to watch out for, where financial literacy is concerned. And I think it's so important.
It's important.
Very. I think there was a survey that was done, I don't know whether it was 2 years ago by S&P, Standard & Poor's.
Yeah.
And they did a survey in the whole world on financial literacy.
Yeah.
And they found that Kenya specifically, the financial literacy levels were at 38%. Whoa. Which is very low.
It's low, yeah.
You know, and financial literacy is not just the knowledge of terms like inflation, credit, interest rates, but the ability to use that information to make decisions
Absolutely.
that affect and improve your personal circumstances. So I think it's a very important
Very
initiative.
critical,
Yes,
very critical.
yes.
So as usual, guys, I need company. I need you to let me know that you're watching and that where you're watching us from. It's important because we're going to answer all the questions that you have on matters investment. As we said, we're talking about opportunities and trends and why it is important for you to actually, if you haven't thought about it, get into investments. And Rina Hicks is in the house. Thanks so much for all the shout outs and all the people who are really looking forward to hear from you. So Rina, first, somebody may be tuning in for the first time today and definitely they will be like, so who's Rina?
Yeah.
So maybe quickly, can you tell us who Rina is?
Yeah, sure. So Rina is an investment banker, a certified coach and an author. And I like to also see myself or call myself a personal finance enthusiast. So I also create content. We have a channel called MoneyWise with Rina Hicks where we create lots of content around investing and entrepreneurship and money, and also train and do coaching.
Okay.
Yeah.
All right, so I want to jump in straight to the questions I prepared on this subject. And of course, the first three is, the first question will be about, your personal observation about, I may call it the state of investment in this country. Are people embracing this or we are still at a place where much is desired?
Well, one of the things that I recognize is the fact that there's been a lot of effort towards increasing financial inclusion. Yeah. So that's the ability for people to access financial services. I mean, with mobile phones now, I think it's about 87 or so percent, according to FinAccess survey. 87% of Kenyans have access to financial services in one way or another, which is fantastic. And that has also come with increase in the number of people who are investing and saving. Yeah. But what has actually happened is that a lot of that increase has not been in investments and saving, but more on credit and borrowing. So there's been a lot of growth in mobile borrowing or mobile lending, and not as much where investing is concerned. So my desire is to see a shift for a lot of financial institutions towards encouraging people to save and invest. But there's definitely been an increase and a growth in the number of retail investors that are involved in investing, whether that's locally, in the markets locally, in money markets, in the stock market, but also abroad. We've had a lot of people investing in things like CFDs, foreign currency trading, ETFs, because now we have brokers that are licensed locally. To trade in markets overseas, which has really opened up a lot of markets for Kenyans.
Absolutely. That's good news. At least people are really opportunities are there, and people are really embracing this. So for someone who's watching, there'll always be someone who's saying, okay, investing, and all those kind of things. I'd like you to lay an emphasis on why it is important, especially now. In fact, you tell us when someone should start, but why it is important for someone to start thinking about investing for their future.
So first of all, the question is what is investing?
Yes, what is investing?
Let's start there. So investing is putting your money into something that will grow in value or bring in money at some point in time. So you put the money in this thing, whether it is going to the market, you buy eggs, you put them in a warm place, they hatch, you get chicks, they grow, and then you sell chicken that then bring in more value. Or you go out, you buy land, excuse me, you build it, rent it out, you get cash flows, or any other asset. So you invest your money in something with the hope that at some point in the future, you will receive more than what you put in cash flow, whether you sell or you receive regular cash flows. Why is that important? It is important because we have something very interesting called uncertainty or risk, right? And a second thing called inflation. So with risk, for example, right now you're employed or you have run a business. You don't know how things are going to go in that business or in the industry that you work in. We don't know that you're going to continue to earn a salary comfortably. A lot of people are contract workers and their contract maybe is expiring in 6 months or in 1 year. We don't know that the contract will be renewed. And so you have to ensure that you're putting your money away to be there for you when you don't have the ability to earn an income.
Very true.
In addition to that, how many years do you work for, Maina?
You can't work for long. Maybe it's just half your life and you're done.
Yeah, like 40 years.
Yeah, 40 there.
I mean, if you get a job at 20 and retire at 60, those 40 years. And you might live till you're 1995.
And even at 20, you're still a student. Let's just talk about...
Okay, so maybe 25. Let's talk about 25 to 65 then.
Less a year.
All right?
Actually,
So you have 40 years to work. And if you retire at 65 and live until 95, those are 30 years that you have to then finance from having worked 40. You understand?
Absolutely.
So if you don't invest and you go to work, you consume, go to work, consume, and every month you're consuming everything that you have earned. When you're at 65, then what happens for the next 30 years?
Oh no.
So what ends up happening is a lot of people rely on their children and the society around them to finance their lifestyle, which is the reality for a lot of Kenya. In fact, there's a statistic that I saw that 70% of Kenyans are retiring with only $1 million shillings or less for retirement. Now, how do you use $1 million shillings for 30 years?
You can't.
Maina.
It's kidogo.
Those are the days you need money. You get illnesses here and there, you're older, you need support, you want to be able to have a relaxing time, maybe even travel. You can't do that with $1 million shillings. So how do you survive? You have to put aside whatever you can.
Absolutely.
To then help you in those years when you don't have an income coming through.
And so, I had a chance to speak to the CEO RBA, and you were saying the moment you start touching that salary, you need to start thinking about your retirement. I'm sure you want to emphasize on that, absolutely.
The moment you start touching your salary.
Yes,
which is when you start earning. The moment you start earning, you have to think of, because you only have such a short period of time to finance quite a number of years of your life when you won't have an income. It's true. The unfortunate thing is we start thinking about retirement. Most people at the age of 40, when they realize, I'm 40. Miaka inaenda. I am retiring in 15, 20, 25 years. Oh my gosh, I don't have much time and I have no assets. A lot of people are 40 years old, have no assets, and have to think, okay, my children are going to university or my children are going to high school. I'm going to be retiring soon. What am I going to do?
My goodness.
So the moment we begin earning, put aside and get into a habit of putting aside minimum 10%. But if you can, put aside 20.
Yeah.
Yeah.
Squeeze yourself to that.
Yes.
Are you listening? Are you listening to this? My goodness, let me just give a shout out to some of the people who are watching, because I asked, it will give you time to sip some tea. Wow, Patty Madegi as well. Patty has been a
Patty's
fan.
amazing. Hi,
Right?
Patty. She's so awesome.
Of course, Carol Heziba as well. By there, she's commented on calling it eyeshadow. Okay.
Today I tried.
Yeah, she says she loves it, and so thanks guys for tuning in, definitely. And even Catherine in Malindi, thanks a lot for checking us up and re-tuning in. Geoffrey Lemba, as usual, at Valley Arcade, Nairobi, checking in as well. Thanks a lot, guys, and send us your comments as well and questions that you may have. Jackson Ouma on YouTube as well. Every day, every talk that you have transforms my journey to financial freedom as I look to retire at 35. Wow, that's early. 35. That's a good one, I know.
So he'll have how many years to live?
I know.
But maybe he means retire having developed passive income streams, and that's fantastic.
Absolutely. And we also have Ton Mwema as well, listening in, Daniel Mutisa, James Karanu. And, if you have any questions, I can see James has already sent some, please send them in. Now that we're talking about retirement, and I had a question way later down there, and I think we let's just dwell on it a little.
Okay.
And, you've mentioned about the black tax. That's what they call it here, where people at their by the time they hit 70, everything they had, the small thing with the NSSF is gone, is everything else, and now it's kids. And as you talked about disease and some of it, there's a statement that says that most Kenyans are a disease away to poverty.
Yes, and it's true.
And there are so many things that people really need to think about, as you said. Let's talk about schemes, because apart from the NSSF that people contribute who are employed, people can opt to get into schemes, and even employers have, sort of brought in schemes that they contribute, and even employees contribute, so at least they can safeguard a better future. I want you to send in your comments and your thoughts on that as well.
So you mean like pension schemes?
Absolutely, yes.
Yeah, so they're available to everybody, whether you're employed or not.
Yeah.
So how they work is, let me start with the employed.
Yeah.
So some people who are employed are fortunate enough to have a pension scheme with the employer. And how this pension scheme works is the employer sets up either a direct scheme for themselves or under an umbrella scheme where the insurance company then creates investment opportunities that this company, so they deposit money and the insurance company then invests in it, or the pension administrator then gets a fund manager who then invests that money. Yeah. So it's not an insurance policy, it is an investment towards retirement. Yes. So what happens is the employer contributes a certain percentage, so let's say for example 6% of your income, of your gross income, and then you also contribute 6% of that, and then that gets invested every single month towards a pension scheme. So this pension scheme then invests this money, and if you wait until the age of 65 to withdraw, you're not charged any tax. Okay. Now, a lot of people are like, oh my gosh, that thing is just, the interest is low, it doesn't earn a lot. But the beauty about it is this. Number one, there's no tax. Yes. So for example, if I earn 100,000 shillings and I decide I'm going to invest 10,000 of it into my pension scheme, the government will take, so that, I'll invest the 10,000 and KRA will tax my salary on 90,000. Okay. Okay. Yes. Up to a maximum of 20,000 shillings. Yeah. Are we together? Yeah. So up until 20,000 shillings, I get no taxes at all on that amount of money that I invest. Wow. So if I have 100,000 shillings, I decide to invest 20,000, KRA will tax me on 80K. That's good. So there's already a saving there. Absolutely. So my employer then contributes the amount. So at the outset, if my employer is contributing, I'm making 100% on my investment before any of that money has been invested into anything. And so if anybody's listening and they have an opportunity to contribute and have that matched by the employer, please, it is a no-brainer. Absolutely. There's no thinking about it. Yeah. Just contribute, let your employer contribute to it, and there's a benefit. And a lot of people, what they do, for those who are fortunate enough to have an employer who contributes, they usually say, nah, let the employer contribute. See, this money is mine. Yeah. It's too much money to put away. Please contribute, because then you add to the pot, and you also benefit from the tax-free status of the pension scheme investments. Yeah. So that's the person who contributes with an employer. Yeah. In some instances, the employers who would love to do it but the company has not grown to the level where they have the ability to do it. In that situation, then you can also still set up an independent pension account with a pension administrator. Or an insurance company. And what that then does is that you have a forced saving towards your retirement. Right now, Maina, if there's an emergency in your household, whether that's your extended family or your own, you will dip into wherever you have your cash available. You sell assets, but you will not, rarely will you tap into your pension. And so because it's a forced saving, it's money that then ends up assisting you at the point of retirement. And the beauty about this amount of money is that you can actually borrow against it. Did you know that?
I didn't know
you
that.
Can. So you continue to save, you get to a certain amount of money. You can use it as security to get a loan to buy an asset, such as a house or a unit somewhere where you can generate more income. Even as your pension continues to grow. So there are many advantages with pension. It is not a boring asset. I think it's important for people to use it for their safety net for those number of years after they retire, because it will come in as a nice lump sum that you can either invest in something that gives you a cash flow throughout your retirement, or you can just get it as a lump sum and see what to do with it. If it's very little at that time, at least it's not, well, let me put it this way, it's not enough to support you through your entire retirement, but it makes a difference.
Absolutely. And, speaking about that, because there's so many people who are employed and there's NSSF being cut. So are you saying that if I'm employed and have NSSF, just know that it's important that even I personally, independently, to really think through investing through a scheme, is it?
Absolutely, NSSF is not enough.
It's not enough.
That's why I said 70% of Kenyans are receiving $1 million shillings or less for their retirement. That $1 million shillings or less is from NSSF. Some people are getting 600,000.
Oh no.
Some people, depending on also when they started to contribute. Some people it's even less than that. So, my friend, it is not.
And that money, once they get it, it just disappears in a short while.
Mean, in 2 months, it's over.
Speaking of which, and I know we were not just talking about schemes today, but let me just ask on this because I have seen it. I've seen someone who got a lump sum from NSSF, I believe, at their retirement age, decided to get into an investment, something big, some business, and then in 1 year,
it was gone.
Everything gone. What's your quick comment on such when you get this lump sum money?
So my thinking is that when you get this lump sum, sign up with an insurance company for something called an annuity. The age of 65 is not the time to start experimenting.
Hey, you're right.
You don't have ability to take risk. Because you don't have time to recover if things don't work out. Because you also don't have an income that's coming in. And so when you do receive that amount of money, my suggestion is, because it's pension, money that you've been saving towards for a long time, and you have other assets, hopefully, put that money in an annuity. And an annuity is a product that you sign up for with an insurance company that then takes that money and promises to pay you every single month like a salary. So if, let's say, for example, you put in an annuity 10 million shillings or even 1 million shillings, you get roughly about 10% of that amount of money every single year. So roughly, if you put $1 million, let me use 10 million because you've saved for many years. You put 10 million shillings, you're looking at receiving just under 100,000 shillings every month, roughly maybe 70K, that you get. It's like a salary. Isn't that enough, at least during retirement, to cover basic needs?
Absolutely.
Yeah.
And give you one holiday.
And give you a holiday. So put it in an annuity. Don't start guessing, I don't know, starting a shop somewhere. Why? And you could lose that money. It takes 5 years for businesses to actually get to a place of being stable and going into break-even level if they don't collapse. So at 65, if you've not been in business, don't start one. But if you've been in business and you want to then, scale that business up, that's different. But if you've not been in business, you've been employed as a civil servant, at the age of 65 is not the time to start. No. I mean, you can start, but not with money that the only money you have.
Speaking of which, you've mentioned a word that I had a question on about risk appetite. Because you've said, at 65, by the way, your risk is, don't dare go those directions. So let's talk about risk appetite and, just expound on it, because we have young people watching, we have guys in their 20s, others in their 40s, others in their 60s. Is there anyone watching in their 70s? If you're there, tell me. But anyway, Let's talk about risk appetite.
So risk appetite is about two key things.
Yeah.
Your ability to take on risk and your willingness to take on risk. Those are two different things. So for example, I could be willing to take on risk. I am a risk taker, generally. I mean, I've gone bungee jumping.
Yes.
Bungee jumping is jumping from a very high place on a string on your legs.
I know that thing. I know that
I've jumped off a plane.
Yes.
I've gone abseiling. Like, I generally love, high adrenaline,
things,
like,
huh?
yeah. Now, as I've grown older and had children, I mean, there are some things I can't do.
You cannot.
Because I don't want to risk my life. But when I was in my 20s and my 30s, I'm like, bring it on. I'm going to enter a plane and go and jump off it.
Yes.
If that parachute doesn't open, it's okay. I mean, sorry, but it's exciting just, doing those sorts of things.
Yeah.
That is ability to take risks because I'm young, I don't have responsibilities, I don't have dependents, and I also have a willingness because it's my personality.
Yeah.
But as I grow older, even if I am still the same person, I may have willingness to take on risk, but I don't have ability.
Yeah.
Because now my ability is curtailed by the fact that I don't have time to recover from losses.
Sure.
So at the age of 70, even if I am willing to take on huge risks, I am not able to.
Yeah.
So that's what makes up risk appetite. So you have to look at your willingness and also ability. When you're younger, there are people who are in their 20s, Maina, who have ability, but don't have willingness because they're generally very risk averse. Like, I have a son who's very careful about making sure he makes the right decision. He doesn't want to jump from, So it's just personality is what makes willingness, but ability is also very important as to consider.
Absolutely.
Given your personal circumstances. You may be a single mom, you have 3 kids, you don't have ability. You have to be very careful about the decisions that you make because you can't afford to lose.
Yeah.
Or you might be very wealthy, you have lots of assets, you might be 50 and you can lose a little, you have ability.
Yeah.
And if you have willingness, then go ahead and take a bit more risk.
Yeah.
So you have to look at it as a very, very important consideration when making investment decisions. And so even when you sit with an investment advisor, those are some of the things that come into consideration when making investment decisions. And even when formulating your goals, you have to think about what is my time horizon? How much time do I have?
Yeah.
What is my ability and willingness to take on risk?
Yeah.
Yeah.
Wow.
Yeah.
So much to talk about. My goodness. Now that we're talking about previously we were talking about opportunities and we talked about a bit of schemes. So I want to get back to the opportunities because people will be asking, hey, okay, you're talking about investments. What other opportunities exist? Okay. Let's talk about some things I see around, like money markets.
Yeah.
Talk about it a bit.
Yeah. I thought I was somewhere this week and I talked to somebody in the collective investment industry.
Yes.
Collective investments are these companies pool funds together and invest, all these pooled funds in different opportunities and they manage those funds. So anyway, so I was talking to somebody who works in an asset management firm. Yeah. And I was just like, we've talked about money markets for so long. Everybody knows what a money market fund is. And she said, excuse me, the penetration rate in Kenya is like this.
Kidogo. She
said, we have less than 200,000 accounts.
200,000.
Can you believe that?
Out of almost 50 million people.
Right?
Hey.
But okay, so if you just take out young people.
Okay.
I don't know how many those are, but call it 30 million.
30 million,
30 million, we have 200. I was so shocked. So we will talk about money market funds.
That's a drop in the ocean.
So what are money market funds?
Yes.
Money market funds are collective investment schemes. These are schemes where that are run by asset management companies. These are licensed, regulated institutions that pool funds. They get funds from us retailers, from institutions, like companies, from pension funds, and they pool these monies together and invest in different opportunities. And the money market funds is one of them. Many people know them as unit trusts. So money market funds are unit trusts. And how do they work? They're very flexible. You invest your money and it's like a bank, it's like a savings account. So you invest your money and you earn an interest over the period that you invest your money. And you don't have to invest your money for a long time. There's no lock-in period. You can enter and exit as you please. So the minimum investment amount is also very little. In some instances, even 100 shillings. But some say 2,000. So depending on the company, with 100 bob, you can start to save. And they give you very attractive returns of about 8 to about 10% in the market. And it's per annum, 8 to 10%. Some give even 7, but so there's a huge range. But it's per annum. which is fantastic. We talked about inflation when I was talking about investments, and inflation being a very key consideration, because if you like something now and it costs 1,000 bob, and inflation in Kenya is 6.91% currently. Do you know that?
That's too high.
Imagine. So if something is 1,000 bob, it's going to be 1,069 shillings next year.
Top.
If I invest my money in, let's say, a savings account, and or even in a current account, I'm earning zero, right? That's not even investing. It's putting my money
just
somewhere.
Just putting there, yes.
I will have 1,000 shillings, maybe even 995 because there's ledger fees.
Yes.
Okay? And now I'll not be able to afford what I want. But if you put it in a money market fund, earning 9%, you will still be able to continue to maintain your standard of living because you're investing in something that's working alongside you, even as inflation is there. So it's a great place to park money because I can exit when I want. The rates I'm giving you are less net of fees. And there's no exit fees. If you want to exit, you just send an email in 3 days. The money's in your account.
And you're good.
Very convenient.
Wow. I hope that breaks it down for you guys about money market funds, and people should consider that as well. I think it feels a bit more safer. That's just my thinking, because you have a say, isn't it?
So there's a purpose for it.
Yes.
I mean, you can't invest all your money in a money market fund because then you limit your ability to make good returns, because you can make much better. All right, so it's a great place to park money when you want to save towards a project. Maybe you're getting married, and instead of putting the money somewhere where it's earning 0 or earning 1%, why not put it where you can earn 9? And you save towards that. Maybe you have a fund that you like to educate children with every year, and you have money just sitting. Put it in a money market fund. Or maybe you want to put money for your emergencies, and you're saving for your emergencies. You can put it in a money market fund. And but for long term, for long term, you want to take a bit more risk and invest in something that can give you better than the 9%.
And this is money you can keep increasing in terms of value.
Absolutely.
Is it?
Absolutely.
So you don't have to have all that lump sum to get in. Let's talk about a different one because of time. Let's talk about the stock market. I know it's huge, but hey, it's an opportunity, because we're talking about opportunities now that are there. The stock market is very interesting, very interesting, and I personally am excited about it because I'm in it. So, there's always opportunities in the stock market, Maina. I know people are like, the market has gone down, the economy, but there's always opportunities. Always. And so it's a great place because you don't need a lot of money to invest in the stock market. All you need is, minimum investment is 100 shares of any company. So with 1,000 bob, you can start to invest in the stock market. And we're happy to guide you on how you can do that. And so when you look at, let's just look at last year. Last year, because of COVID, prices in the stock market fell. On average, I remember it was, I think the NSE 20 share index fell by about 30%, which is understandable. Things were thick. And then as the government started to ease the restrictions. You remember we used to have to be in the house by 7. And restaurants were closed, bars were closed. We couldn't be able to access a lot of the services that we normally would, literally after 5 o'clock. So that limited the ability of businesses to make revenue. And so that affected the economy. So when the restrictions started to be eased, the economy began to improve in performance. And so the sentiment also improved and the prices started to go up. Year to date, year being 2021 to date. In fact, there's a video we did with you. I wish people listened and began to invest because we've seen improvements and growth in the stock market up to, there's been 60% increase, 40%, 30%, 90%. I was looking at about 30 companies that are listed on the stock exchange, and they've all increased in value between 9% and 69%. And even the NSE has hit the all-time high in terms of index now.
There you go. And so, but on average, because there's some that have also not done very well because of COVID and other reasons, and there's some that have done very, very well. On average, we've seen an increase of about 20% growth on average on the indices or the index. And so the stock market should not be ignored. Right now, we're going into an electioneering period. So prices have gone up, yes, but we're going into a season of a little bit of uncertainty. We also have generally huge problems as a nation because of our level of debt and some of the promises we made some organizations called IMF, which means that, we have to the government has to make certain decisions. We're crying that fuel prices have gone up. But the reason they have gone up is not because the government wants to punish us. They borrowed money and there were conditions. Okay?
Yeah.
And for the conditions for getting help were that, excuse me, you need to increase your taxes and find ways to reduce unnecessary revenue, expenditure, so that then you're able to increase your revenue to be able to pay back some of these loans. And so they had to increase our fuel and other taxes. So when that happens, businesses get affected, all right? We've seen inflation now saying it's 6.91. Now that has a ripple effect on many things. And so that's likely to affect the growth of the economy. And then we're going into an electioneering period next year. So that's likely to cause a slowdown. But that then presents opportunities as well. For investing. So I'd say invest slowly through the cycle.
Yes.
With the stock market, it's long term. Don't invest now expecting money in 6 months
Some quick fix,
or in 1 year. Invest with 2023 in mind and 2024 in mind. And there are companies that are really resilient when it comes to issues of economic downturns, as we've seen from the results that were announced recently. So continue to invest and you will benefit at the end of the day.
And we're going to have a session just on
stocks.
On stocks. I know it's a whole thing. How do you choose what company to go in? You know, the ones that at least are resilient, as Rina is saying. Let's jump into another one as well, because I don't know whether we are still at a place where real estate, which is now the other opportunity, is a viable investment. But I would like to, from where you see it, what have you observed, or should people slow down on it, or is it still a place to jump into? Talk about it.
Again, it's similar to the stock market.
I know.
There's always opportunities. There's always opportunities, even in real estate. It just depends, what are you looking at within real estate? There's different areas within real estate. I remember when we were doing the road shows and trying to sell an income and a D-REIT. It's a real estate investment trust that was being launched by Acorn. And just the conversations that we were having with the different investors and helping people understand that this particular REIT or real estate investment trust has focused on student housing. So while people are saying no, commercial real estate is not doing well, when you look around, offices are empty, you know, we're in a COVID season, people are moving out. What was interesting to see is that student housing, first of all, when you look at the state of student housing in this country, it is deplorable.
Oh no.
My goodness. I mean, like commercial ones. Oh my God. It's like the students will live there, you know? So these guys came up with a solution to, you know,
give
because there's a
decent
problem.
Place.
Decent housing, you know, and provide a solution where there's none. And so because of that, there's a huge potential for them in the long term for setting themselves up as, you know them, Kwetu,
absolutely,
right?
Kwetu. I wanted to ask whether, can we mention them?
Yes,
because
it's Kwetu.
we've worked with them, they're amazing. I mean, I went there, I can live there.
So they've come to provide a solution for a need that exists. So when you look at something like that, that's a fantastic opportunity. Another opportunity that has been there for a certain kind of commercial real estate is warehousing. Okay, so warehousing where you provide spaces for companies to store documents, for example. You know, there's real estate opportunities that are not.
And even I've seen guys doing that as well, where businesses and SMEs who can't afford spaces, where they just buy a small space. And people are making money out of it as well.
So even low income to middle income housing, you know, where you're charging rents of about 20,000, 15,000, 12,000, there's huge demand there. The people who are struggling are those who have been providing housing for high-end customers, because when the economy has gone down, businesses have shut down, or businesses are not doing as well as they were before. People are not able to afford to buy houses as they were before, you know, very expensive ones, 50 million, 100 million type housing. Those high-level real estate housing projects are not doing as well. But for those who are medium income, low income, they're still selling.
Wow.
Like if you look at people like Savo, talk to people like Savo and find out how. I mean, they've done extremely well. There's companies like those that have been able to meet a segment of the market that still has a huge demand. They're selling houses for 2.7 million shillings.
Wow.
Which people can afford.
Very affordable,
To either buy, and because they're buying because they know they can be able to rent it out for 18,000-20,000 shillings.
You're right. Just again, same sentence, there's a lot we can talk about real estate, right? There's so many things as well, because there's also observing, Ponzi schemes that come up, and some people are crying out and all those kind of things. But then let me ask you, just on real estate, in terms of investment, is investing in a home for yourself something worthwhile? Let me use that.
I'd say yes, because it meets a basic need, and that's a need for housing.
Yes.
And you want to be in a situation where you don't want to worry whether you will be chased out of your home. So you have to make sure you have your basic needs covered. All through your investments. Your assets must make sure that three things happen.
Yeah.
Your basic needs are covered, you're able to sustain your standard of living, and you give yourself an opportunity to attain the dreams that you have. That's why we invest. So when you look at your basic needs, your house is part of that basic need.
Yeah.
The mistake we do is when we're coming to meet that need, we are 29, 30, 35, and we want to have our dream home. And so I go out and get a mortgage, and I'm like, I want to live, where do I want to live? I want to live in Karen, I want to live in Runda, I want to live in, okay, so then I spend the rest of my working life
paying for my
home. And I retire, and the little I get from my retirement or my pension, guess what I do? I pay off the balance of my... There's a YouTube video, and I'm forgetting the name of the lady.
Yes.
And she was working for an international organization on a contract.
Yes.
And she bought a 50 million or 54 million home.
Wow.
Okay? And she had paid down something like 50 million. I'm forgetting the details.
Yeah.
Had not been able to finish paying off, and her contract was terminated.
Oh no.
And guess what happened to her home? It was taken away from her.
After paying all that?
Imagine. What are the investments that she have? Nothing. Lady has gone into depression. The point is this. Do not buy a home that you cannot pay for easily.
Absolutely.
When you start off, don't start with the house that you would love to live in 20 years from now.
Yeah.
You can work towards that. In fact, my view is
yes.
buy it as an investment that you will live there for a short period of time, then move out, and you can rent it out and it becomes an asset that generates an income for you.
You're right.
But if you want to be able to live in your home, the one that you like, it's okay, but make sure it's affordable for you, and you can make those repayments comfortably.
Yeah.
But not so much that it's a stretch and you're not even able to make other investments.
Okay.
It cannot be your only investment.
Woo! My goodness. I hope these things are hitting you like they are on my end as well. Thanks so much, Maina. Now, final one, because there are so many other things to discuss and I know time will not be on our end and we need to answer your questions, so please keep them coming.
Okay.
Cryptocurrencies.
Yeah.
There's a lot of conversation going around here and there. We're seeing the billionaires of the day, really some of them investing in it. Sometimes we hear, I don't know what has gone down, what has gone up. I would want you to at least comment on that as well.
Yeah. We can't ignore crypto. I don't care what anybody says.
Yes.
I've been saying this for a long, long time.
Yeah.
And it's strange that I would say this, being that I am a financial analyst and I am licensed by some regulators in this country. But the truth is, Maina, the world is changing.
Yeah.
And what actually fuels cryptocurrency is a technology called blockchain.
Yes.
And when you look at what blockchain is and the benefits that it has for us, they are huge.
Yeah.
You know, in terms of providing security, we're coming from a place of centralized
cash.
Everything's centralized. Like confirmations. Like for example, let me give examples so that it's easy to explain this.
Yeah.
Let's say you bank with XYZ Bank.
Yeah.
Okay. Who then decides or knows and makes confirmation that your transactions have taken place in that bank?
There's people there.
The people there.
Yeah.
If the workers there decided that they were going to take 2 shillings from every single account they hold, if they have 8 million accounts and they take 2 shillings from every account,
who
will know? Will you know?
You can't even tell.
You can't
tell. Yeah.
You will not be able to tell.
Yeah.
And that has caused risks and huge problems because of lack of trust in the financial system. And I'm saying globally, I'm not talking about Kenya only. And so what has happened, and particularly with the financial crisis that took place in 2007, 2008, is when this blockchain came about, because guys were like, excuse me, we can't rely on one counterparty to then verify and confirm that a transaction has taken place. We need a decentralized system.
Okay.
And this decentralized system has more than one party confirming that a transaction has taken place. Maina has sent money to Rina. We have hundreds of people who've confirmed, yes, Maina transferred money to Rina. Now, if one person says, no, that transaction didn't take place, or no, the amount was not 10,000, it was 995, everybody else will be like, no, money was transferred, it was 10,000, and it is confirmed. So security and credibility in the system then becomes as a result. Now, the uses of that, from art, financial services, land registries, I mean, it is amazing, the application for blockchain. Wow. So when you look at blockchain as a technology, and now the cryptocurrencies as a result of the blockchain, it is going nowhere, my friend. And so I'd say do not ignore it. There's lots of content online that you can learn from, just at least start to understand. You can invest very little, and don't buy into multi-level marketing. I don't know mining what. No, just buy the coin and hold it, and just see what happens. And you know, but first understand. I always say, please do not invest in something you do not understand. So first take time to understand it. If it's still too complex and just like I don't get it, it's fine. Even Warren Buffett has said, by the way, this thing called crypto, it's you guys, you're on your own. And it's okay. If you don't understand it, you don't have to invest in it. We can't invest in everything. The amount of investment options are so many.
There's so many.
It's about identifying what is making sense for you. What are you able to invest in? What purpose does it serve in your portfolio? And so then let me go ahead and invest in it. The important thing is to invest and do it consistently. But choose what works for you and invest. You don't have to get into crypto, but I'm just saying, do not ignore it. Our children, this is what they'll be investing in, I'm telling you.
You're right, you're right. And by the way, just to alert the viewers, you know, I had a chance to moderate the first Africa Digital Finance Summit. And it was right here in Kenya. And there is a second one as well that is coming up. So you want to check ADFS, Africa Digital Finance Summit, and register. And all these global techs, guys who are big in all this decentralized finance will be there to really speak about it.
When is it?
It's actually next year, around February. I'll give the dates out, but just check it out. Just right now, if you can, go check ADFS, Africa Digital Finance Summit, and there will be something big there. So at least there's a lot of knowledge, as you said. And this can take, if you can tell, that's a whole conference that takes 3 days, and we're only trying to talk about it in 3 minutes. It can take another whole time. So today we're just really skimming through, and so send in your questions, whatever you have. I'm about to jump into, we have 9 minutes. I'm about to jump into the questions part of it. Now, let's talk about red flags. The other day, there was a conversation somewhere, I don't want to mention the names, and the moment that organization brought up that conversation, people would just send in questions. You guys. Oh gosh, I'm feeling like I'm about to say who they are. People have been conned, people have lost money, people sometimes are getting into investments without knowing, and then boom. I know there are so many red flags we could talk about, but are there some critical ones that you can advise people today? That yes, there are opportunities and people are jumping into trends that you've seen here, but there's some things you need to check out on, some what I call fences, you know, so that you're not just jumping in without really burning your fingers.
Before I go into red flags, maybe I can give a disclaimer.
Please do.
There's no guarantee in anything.
That's a hot one.
So sometimes I could start out.
Yes.
I'm not out to fleece you. I have an idea, I have a business I'm starting, and I want investors to come in, give me capital for us to do this amazing thing. And I've projected that we'll do really well. You'll make a return of 25% in 3 years. And so let's go together. And then we get in and COVID happens, or we get in and there's an earthquake, or we get in and something happens and things go wrong and it doesn't work out. And so when you invest, you have to know there's something called risk.
Absolutely.
And risk is in everything.
Every investment, absolutely.
The only one where you know that you will get your money back, guaranteed, is government bonds. Government bonds, but there is still risk there, but we will talk about that later. Now, when it comes to others that are for sure fraud, and this is, I think, this year's theme for the World Investor Week, fraud is something that is now what we can talk about red flags. When something is fraudulent, there are key things that you have to watch out for. One of the ones you need to look at, the first thing, who are these people behind this opportunity? Who are they? Are they people of integrity? What have they done before? What is their track record in terms of performance in the different businesses that they've been involved in? What experience do they have? And so can I trust them? Who is the key person who's driving it? Who's on the board if they have a board? What is their corporate governance structure like? Okay, so then we go into the next thing. What's the business they're saying they're getting into? The moment it's hazy,
yes,
or you can't quite understand,
yeah,
or it's too complex for you to understand, and you're an adult who knows how to read and write, there's a problem.
There's a problem there.
Yeah.
Right there.
So when it's hazy, they're not giving you all information, there's lack of transparency, that's a red flag.
Yeah.
Another red flag is giving interest rates that are over and above the average market rates.
The math, 30%.
Okay. So if we're in real estate, for example,
yeah,
and they tell you we're going to give you 100% return.
What?
Sorry, what?
100%.
Yeah. So don't just look at returns, you
yes,
have to look at risk as well.
Yeah.
And so when the returns are much higher than what is on average, it's a money market fund and we're giving you 21% when everybody's at 10, or we're giving you 18 when everybody's at 9. I mean, there's a problem.
There's an issue.
Okay, there's an issue there. That's a red flag. Another red flag is when they're asking for, come to this meeting, and then we can only explain to you in the meeting.
Yeah.
Then when you come to the meeting, you will understand nicely. I'm just like, why do I need to come for a meeting in a hotel? Another one is pay 75,000 or 17,000 to get access to the opportunity. Then we'll give you details. Or you have to first bring in your friends and family and then sign up all these guys, and then you'll be able to make money from these guys coming in. Usually those are not legitimate opportunities. Those are fraudulent investment opportunities.
Very shortly,
okay,
the safe havens that you've mentioned.
Are we going to ask questions from the public?
Yes, I'm about to get in there right now. But very quickly on government bonds.
Okay.
I know it's a whole other subject, but what can you say about it?
Government bonds are amazing.
Yes.
In Kenya specifically, because they give such great returns.
Yeah.
And the risk is extremely low.
Yeah.
And so what they are is you lend money to the government and they promise to pay you back your principal with interest, and they pay interest periodically over a certain period of time.
Yeah.
Government bonds range from 2 years to 30 years. So every month there's a government bond that is issued.
Yeah.
Every single month.
Yeah.
And so each month you can make a decision whether you want to invest or not.
Okay.
The ones that I recommend for people to invest, because they have an active secondary market trading, and we can get into the details of what that means, is infrastructure bonds. Infrastructure bonds have high demand, and so if you enter into an infrastructure bond that's 21 years, and you're like, how am I going to invest for 21 years? 21! How am I going to do that?
Yeah.
Then you can say, it's okay, I'll invest. I know in 7 years I might need the money, I'm not too sure.
Yeah.
And if 7 years comes and you need the money, you can sell the bond.
Okay.
Because they have demand in the secondary market.
Okay.
Those are really good bonds to hold. The risk with these bonds is that when you want to sell, you can't find a buyer.
Yeah.
Or when you want to sell, the interest rates have gone up, and so the value of your bond has gone down. And so then you're not able to get the price that you want. But in terms of the interest that is going to be paid from government, it is fixed and it is guaranteed. You will get your principal and interest back. Okay.
If this is new to you, go to MoneyWise channel. That's her channel. And there are actually 2 videos I know that you've talked about investing in bonds as well. So you can go and get lots of details out of it. But it's an opportunity. For us, we're talking about opportunities today. My goodness, now let's get to the questions. Jackson Oma, no, it's James Carano. What if the income is not enough to save, especially for those in mashinani, hand-to-mouth people? That's what you said.
Yeah.
Comment on that.
So I'll just give a story. And I've given this story many times, including in my book. I have a book, Maina, called MoneyWise.
Yes.
Create, Grow, and Preserve Wealth.
Absolutely.
Now, there's a man who I encountered in 2016 or 2017 called Kibe Wamei. Kibe Wamei used to roast maize on the street and polish shoes. Low income earner.
Yeah.
And he then encountered some women who were joining a circle, and they told him, come, let's join this circle. And he got encouraged to start to save, and he started to see the potential of what he could do. So he joined the circle.
Yeah.
He saved 200 shillings. How many?
200.
200 shillings daily from his daily
work.
Yeah. So he was able to do it. And you know how long he said he invested for? 14 years. Whoa. 14. He put 200 shillings every day. Every day he'd put it aside, take to the circle. Put it aside, take to the circle. 14 years later, he had 800 and something thousand shillings. Yeah. He went to the circle and said, can I borrow money? I want to buy a minibus matatu. He bought a minibus matatu with that money, employed a makanga and employed a driver.
Yes.
And he has been able to receive a second income stream from that matatu. Yeah. Continued with the May.
May is still happening.
And polishing shoes.
Yes.
But now he has a second income, which is there.
Yeah.
Now you see he has been able to get another income pay off the bank, and can also start to invest in something else. So irrespective of where you're at, I believe you can find an idea to generate another income. Or save what you, even if it's 100 shillings, there's somewhere you can put that money and save, maybe join a SACCO, because with the SACCO you can invest and borrow 3 times your investment, even up to 5 times your investment in some, okay? And then you can then invest in an asset that brings in another income. Just start where you are. It doesn't matter how much you earn. It's about how much am I able to put aside from what I'm earning that I can be able to invest in something else.
Okay, quick question, thanks for that. Mungai James, thanks Maina. Ask Rina, which are some of fund managers who offer MMF product via an app or website without having to physically visit their offices?
Okay. Good. I know there is CIC, asset managers. There is Sanlam. I think they have a website that you can do that with. And Britam. There's another app, very interesting, called Koa. Koa. Okay. KOA. And you download the app and you can save, and you can actually put targets. I want to save for an emergency. I want to save for my wedding. I want to save for a car. I want to save for investing in a house. And my goal is X. And you can go ahead and start to save. From 100 bob on the app. And the underlying fund manager is Britam, I believe. So there's different ones that have come up.
You can check on those examples.
So
sufficient.
I'm sure there are more. There's also ICA. What is it called? Digitrust?
Digitrust. Absolutely. Digivajo, you are saying what trading platform? I think that's the same answer as well. He's talking about trading platforms as well. But can you mention a bit of, because we're talking about trends.
Trading platforms for what? Because we have a trading platform and an app as Faida Investment Bank, where you can trade in the equities. You don't need to come to offices. You can just download the app. It's Faida M Trader. You can set up your account from wherever you are, comfort of your home, and fund your account through M-Pesa or a wire transfer, and then start to trade. You can check your account balances, you can check your portfolio valuation, you can check what the news is for all the different counters that exist, you can check what research is available for that counter, and what our recommendations are, all from the app.
Okay. Jackson Ouma, now you have to do a marathon.
Okay. I'll try.
Which criteria do you consider while considering investing in tech companies in the stock market?
I don't know how
to
answer that one.
I know.
Tech companies, which...
I think maybe like Safaricom.
You know, the criteria is the same whether it's tech or it's a school or it's whatever it is. It's what's the product? Is there demand for it or not? Is there a close substitute? Who are they running this business? Are they credible people? Are they people of integrity? Okay. Absolutely. How has the performance been? Are sales going up? Are sales going down? So have the performance been? Are they making profits? Are the profits going up? Are they going down? What are the trends? How do they perform in comparison with another company that is similar in the same industry? Okay. And then you also check what are other analysts saying about them, because it's important to see, because analysts sit with these companies and sit with the management and understand, okay, given what has happened, given what's happening in the economy, how are you going to respond to that? What is your strategy going forward? What is your outlook for the industry? What are you doing in response to what's going on? And so they have intimate knowledge of these companies. And when you sit with an analyst, and not just one, talk with 2 or 3 and see what their opinions are, then you can make a decision on whether to invest or not.
Okay, lovely. Good answer there. Alex, do you prefer holding shares in a company where the government has a larger shareholding, or a company where the government isn't involved?
Oh my gosh.
That's like a personal one to you.
I don't like this one. Wow. Okay, personally, this is my view. My personal decision where government has little or none.
Wow.
And I will not expound. Next question.
Frida, I have 3 questions. Wait, Frida. Does Emakiba still work?
No, there's no Emakiba. Emakiba was paid back, and they've not issued another one.
So you wait for another issue. Thanks. I recently joined Britain Money Market Fund. Is it one of the safe ones?
Wow. I'm sure it must be. It's licensed. I mean, I haven't heard anything that would say otherwise.
You're right, Frida. You have very good questions. Number 3, how can I access you to be a financial advisor?
Sema at moneywise.co.ke. Sema, SEMA, at moneywise.co.ke.
Okay. You heard it? Good. I think you'll repeat that towards the end of the show, you know. Now, she has another one, very informative book, Rina. Oh, yeah, she has read, somebody has read your book, you know. I bought it on Kindle and loved it. Everyone should get it. Eunice Odor is asking, hello, Rina, can FIDA help in the real estate? Wow.
Yeah, no, not, well, yes and no. Yes, we can help when it comes to real estate investment trusts. So if somebody wants to invest in the Acorn REIT, or somebody wants to invest in the ILAM, the Fahari REIT, then we can assist them.
Okay.
But when it comes to real estate investing, like buying land, subdividing, selling, or buying units, we don't do that.
Okay.
But you know, there are people out there who do.
Okay. So guys, really giving out shout outs. Thanks a lot, guys, for watching all the way. Now I'm just checking on the question on Facebook, skimming through the comments. Ankin, will stocks prices fall further due to the upcoming elections? I think you made a comment on that.
I did.
Yeah.
I mean, they may, but you know, let's wait and see. We're hoping for a smooth transition to the next leader.
Absolutely.
Yeah.
Patty's just giving a comment. You're right about buying a reasonable house where you can afford in case you're laid off. Absolutely. A friend of mine was jailed in Tanzania because of cryptocurrency.
Jailed. I guess it's unlawful in some countries.
Oh yeah, so you have to be very careful where you're doing this.
Yeah, but in Kenya, I love Kenya.
Yeah.
We're one of the most open markets. Our capital accounts are open. You know, you can trade in different currencies. We have one of the most stable currencies in Africa. I love the country that I'm in, to be honest. So we have great opportunities locally.
Lovely. Najma, I have to give a shout out to her. She's always there on the show, you know, and some people tuned in Kampala all the way. My goodness, yeah. Oh, Nish Nemo is there. Let me tell you about these shirts. You see this?
Yes.
Spot on Apparels. Our partners are amazing, you know.
I want one.
You
but
want
a lady,
one, right?
a lady's one.
A lady one, yeah. She has
dress.
ways of doing, yeah, you know. There you have it, you know. Spot on Apparels. If you could run it a bit, so guys can know. She's tuned in as well and saying that, you know what, she read your book as well.
Oh, fantastic.
And she can't get enough as well. Thanks a lot for that. Tuned in as well. I want to just get into a question. Oh my. There you have it. I have a question here now. Good morning. Falling well, traveling to Tororo. We are a group and we have managed to raise about 700,000. How can we invest? How can we identify a project to invest in? They're a group of 20.
Yeah.
Wow.
That's a very difficult question.
Yeah.
Because I need to know a few more details.
I know.
Are they what are their goals as a group? Are they investing long term, short term?
Yeah.
What kind of group are they? Are they registered or not? I mean, I can't. Unfortunately, I can't answer that question without first asking questions.
Yeah. So they need to get in touch with you.
Because goals are the cornerstone of making any investment decisions, and what they want to be able to do will help us know what would be the best suited. And then how old are they? You know,
there's so many things, right? Maybe it's a
things.
group of just young 20s or maybe young 70s. Anyway, I'm just saying. So you know.
So we've talked about different investment opportunities.
Yes.
They can sort of just evaluate what would suit them.
Yeah.
We're happy to also have a conversation with them as FIDA and guide them.
You're right. Najma Iqbal, interesting. What's your take on the ever mushrooming cryptos like Naira coin? How do you evaluate a good cryptocurrency?
So if for somebody who's looking to invest in crypto, unless you are a seasoned crypto techie, please just stick with the ones that have been there for a long time, like Bitcoin. Just buy Bitcoin, hold and forget about it. But these other ones that they're cryptos, they're thousands, and they're new ones like all the time.
Okay.
So be careful about those. Just go with those that are more established, have been around longer, and secondly, don't invest a lot of money in it. Just invest knowing that you could potentially lose your money. It's a high risk opportunity, but also, you know, with high risk, you could double your money. So
you're right.
You never
know. Right. How can one invest in diaspora? Invest in bonds. He's in Muscat.
Yeah, you can invest. You can open an account with the Central Bank of Kenya.
Yeah.
Actually, he should get in touch with us and we'll be able to help him.
Yeah.
Please write an email to info@fib.co.ke wherever you're watching from. Whether you're in Muscat or in Australia or in the US, we're actually able to help you invest in treasury bonds, risk-free at a very low cost.
Okay.
info@fib.co.ke.
Wow. Just final question, then we go. Hi, Maina and Rina. Tell me something about Forex trading. Is it a good investment?
Again, it is, for some who understand it, you need to understand, you know, Forex trading, what it is just trading currency pairs.
Yeah.
So you trade the Euro USD, for example, as a currency pair because you buy it because you think, you know, it's going to go up, then you sell, buy, sell, and so on and so forth.
Yeah.
And so the thing with the foreign currency is being able to understand markets and decisions that are being made by central banks and different countries and what's happening globally. There's so many variables that affect currencies. And so the ability to understand these variables and read the markets and then helps you make a decision whether to invest or not. If you don't understand, first get educated. We have people in the market who do a lot of literacy around that. There's a company called EGM Securities. I'm giving them a plug.
They're doing that.
They do that. I think every week they have trainings and help people understand how to do that. So before you invest, please begin by first understanding what are you doing? How does it work? How can you increase your money? Because we don't make money by losing it, Yeah. You have to minimize losses in this wealth creation journey. So the more you learn, the better it is for you.
Okay, I stole some of your 10 minutes because you started 10 minutes late. So it's 9:10. It's 9:10. So we're going to have your parting shot. But before that, I want the parting shot to also have how people can reach you.
Okay.
And you launched, when you were here last year, by the way, for those people who think Rina has not been here, she's the one who launched our Biz Talks show. That's almost like a year ago.
Is it?
Yeah, I know, right?
What?
Yes, and it's amazing, eh? So you'll talk about Investable because you talked about that you're about to launch something called Investable. I know you did, and it's amazing. It has had a lot of things. Maybe you can say something about that and then give us your parting shot.
Oh my gosh, Investable has been mind-blowing.
Wow.
We've received such huge support, and then we've had 2 cohorts since the show that we had. Cohorts are just groups of people who've been able to go through it. We have a community of almost 50 people who've gone through it, or who are going through it. Majority of them have already finished, and there's another group that's going through it now. It's been amazing in the sense that this group of people have formed a community. We formed a community, and they continue to support one another and be accountable to each other in their investment journey and have grown. It's amazing the growth we've seen. For me, it's not even about people doing a course and finishing. It's about the transformation that is happening in people's lives. And so that has been extremely fulfilling. I'm so grateful for the opportunity to have had this platform. To give the opportunity to people to learn. There's one student who told us how he was amazed. They got together, they got a certain investment advisor to come on and talk about a certain investment product. And apparently the investment advisor was so shocked about the questions that these guys were asking because they're informed, you see? They know how to analyze different opportunities and what questions to ask and what red flags to watch out for, that this guy was sweating. Because this cohort or huge group of people who've done this course were able to know what to look out for in this particular investment. So I would encourage everybody out there to make a decision to try and get this course done. Our next cohort opens in January, on the 27th. Of January is when we open, but in the meantime you can actually go onto our website and join the wait list, and then we'll be able to send you additional information. moneywise.co.ke and just go onto the Investable page. In fact, if you just do moneywise.co.ke/investable, you'll go straight to the Investable page. You can join the wait list and we'll send you additional information on the course. So my parting shot. My parting shot is it doesn't matter where you're from, it doesn't matter who you are, it doesn't matter what family you came from, we can all begin the journey and do well where wealth creation is concerned. Just start today with whatever it is that you have and remain consistent. Success in your personal finances is actually just taking action and being consistent and disciplined with it. And at the end of the day, you will make it. On average, about 28 years it takes to be able to create wealth. That's what statistics show. So don't be in a hurry. Let's just be consistent and move from wherever it is that we are. And at the end of the day, you will make it and you will succeed.
Absolutely. Wow. What a way to end. Thanks so much. Always an honor having you, Rina.
My pleasure. Thank you for having me.
And the book, by the way, the book.
The book is Moneywise, Create, Grow and Preserve Wealth. It's available on Nuria Books. Nuria Books is fantastic because they deliver for free in Nairobi. If you're in Nairobi, they're very convenient. There's also Nuru. Is it Nuria or Nuru? What am I forgetting? It's Nuria Books. Yes. It's Nuria Books. It's on Amazon. It's on Kindle. It's at Textbook Center. In case it's out of stock at Textbook Center, just go onto these platforms like Nuria and Jumia. It's also on Jumia.
Or they can write to you at Sema.
Or you can write to us, sema@moneywise.co.ke, and we will ensure you get a copy.
Absolutely. So any other questions that we have? And sorry, we could not tackle all the questions you had today. because of time. But thanks so much for your patience. All the guys who were tuned in. When I accumulate all these guys, there's so many. Thank you so much for tuning in. I think we need to talk about investments again. I think you need to come more times, not after many months. Thank you so much for your time.
My
guys,
pleasure.
thanks so much for tuning in on Biz Talks. We also on Moneywise as well. Thanks so much for tuning in. Guys saying it's been long, so Rina, you need to do something about it. Thanks for always giving yourself to the people and helping out. Thank you so much. That's how it ends. Otherwise, I'll become a preacher. Bye.